whichever you prefer. Thanks. Makes it a bit easier. All right, good afternoon again. And hi to you, Michelle. It's fantastic to see you here in Dubai. Thanks for making the time available for us. And I'm really looking forward to our conversation this afternoon. There's a lot for us to discuss in the context of Transnet, its financial performance, its recovery plans, and its forward-looking prospects, including, of course, a significant amount of plans for involving the private sector going forwards. But perhaps just for those in the audience and online who are not all that familiar with Transnet, might be helpful if you could just provide a very quick overview of the role that Transnet plays in the South African economy and the way you are structured across key divisions.
Good afternoon, everyone, and thanks for having me. Yes, Transnet, as you've heard from the presidency, a very important state-owned company. Yeah. We essentially have custodianship of the entire freight logistics network in South Africa. Currently, we have 7 operating divisions. Most notably, I think, and very important in terms of the reforms, is the establishment of the rail infrastructure manager. Essentially, we split our Transnet Freight Rail division into the operating company and the infrastructure manager. And then we also have an engineering division that is responsible for all of the rolling stock maintenance. We then have the ports, both the Port Authority as well as the port operations. We operate 16 terminals across the South African coast. Essentially, we do have a number of private operators, but we, from a state perspective, we operate the major container terminals. We have several multi-purpose terminals, and of course we have bulk terminals as well, doing sort of your iron ore and coal and the like. Yes, on the port side, we in fact did this split in about the early 2000s, where we then separated the old Portnet into Port Authority and Port Operations. Right. I myself have spent most of my career within the port operations. But very excited to now be dealing with the entire Transnet division. 50,988 employees, sure, and an asset base of just over 360 billion.
Yeah, the scale is very impressive. And clearly a very important role to play in the economy. And maybe a good place for us to start then, Michelle, is just to reflect a little bit on the results that you released on the 5th of September. I suppose overall it must have been very pleasing for you to see the turnaround strategy starting to reflect, at least to some extent, in those results. Improved revenues, EBITDAs, and kind of a smaller loss for FY 2025. But can you give us a high-level sense of these results and some color, at least, in terms of the operational performance that was driving them, and perhaps some of those areas that are still keeping you awake at night?
Sure, everything keeps me awake at night. I think I'll sleep more soundly when we are in the black. No so yes, look, I think we in fact we are quite excited. It's a pleasing set of results. When we took over, took over the new leadership, everybody was upset with us. The country was upset. Our customers were angry. Everybody was upset. We use our rail volumes really as the major measure of how well we do, purely because it is a very big contributor to our profitability overall. In 2017, 2018, Transnet was moving 226 million tons, and we always got compared to that year. It was our peak year. And since 17, 18, we've had a steep decline in the movement of freight in the country. 2022, 23, the number was sitting at 149 million tons. It was at the time, just after that, about 6 months later, that I started acting in the position. And at the time, the experts were telling us that if you continue on this trajectory, you're going to end 23, 24 at about between 138 and 142 million tons. So, we very quickly engaged our customers, engaged our all of our stakeholders, our employees, labor, and, we went to the customers and said, look, we have to turn this thing around. There's a lot to do. However, our promise to you is that you will not be worse off than you were the previous year. And that was about 6 months into the 23-24 financial year and the start of our recovery plan. We ended the 23-24 financial year on 151 million tons. I think, a lot of the commentators, everybody thought it was going to be impossible, but I think we pulled that off. But it came with a 7.3 billion rand loss.
Right.
And yeah, so if you thought I slept anything that year, I didn't sleep. And then, of course, the work continued. It was an 18-month plan. And, this year we were able to, move an additional almost 10 million tons. We ended on 160 million tons. Container volumes were largely flat. The auto volumes were up, which was good. And we were able to reduce the loss by just over 74% to 1.9 billion. But again, a lot of work still to do. And we're hoping that as we engage in the reforms, as we get the private sector more involved in our business, that, we will see the, let's call it the pace of the turnaround increasing. So I would have preferred that it be a little bit faster, but then again, we want sustainable change. So it's going in the right direction, and, we believe that the kind of things that we are doing, even with private sector coming in fact, with private sector coming in, will make it more sustainable and long-lasting.
Excellent. Just looking at your results, and particularly your bottom line performance, just looking at the costs in particular, there were two things that stood out for me. The first was essentially the extraordinary item that you had in 2024, which is the provision largely for the settlement of the NatRef Sasol matter, which goes back a long way. And I suppose despite the fact that the judgment went against you and that matter was settled, it must be nice to have some certainty that that is out the way and cleared through your financials.
Yeah.
But that obviously has a positive impact actually on this year's costs.
Yes. Look, the results, I think the positive results came out of, one, additional volumes.
Yep.
Two, we had, we're still under a number of austerity measures, so we're trying to be very prudent with our costs. We're trying to spend money and at the same time ensure that there's going to be a return on every cent that is spent. We're also, trying to renegotiate contracts with our service providers. The NatRef settlement had a major impact as well. Firstly, it's the certainty of 10 years of litigation finally finalized. But, we had quite a big provision in our books. And then again, good negotiation. I was part of that negotiation until the early hours of the morning. But we were able to settle a debt of that would have been around 10 billion for just over 5 billion.
Yeah.
So,
that's a great outcome. Yeah. But I think even when you strip out that extraordinary item, from the year-on-year comparatives, your costs were incredibly well managed. So again, congratulations there. It's obviously prudent discipline within the management team.
We've made it very clear to all of our employees, as well as the management, labor as well. We were criticized for our agreement with labor because of the 6% salary increases or wage increases. But, when you are busy with a turnaround and you also have a reform, certainly my personal opinion is you need peace. I don't think anybody in the country or even our customers globally would have been satisfied with a strike in Transnet. So it was very important for me in the last year to ensure that there was no strike. And essentially all we did was extend an existing agreement. But right now, when you look at the performance, for example, both in the rail as well as in the ports, we have a workforce that is a lot more excited, rejuvenated, and motivated to do the right thing, which is what we need if we want to take this business forward. So, I mean, I'm not going to apologize for that 6%, unfortunately. Yeah, I mean, we can do a lot in the country, I think, to deal with wages generally. But from a Transnet perspective, I think that any disruption in our operations would have been a lot more detrimental, I think, to the kind of numbers that Rudy wants or anticipates.
Absolutely. One of the other pleasing numbers that I picked up in your results was the security incidents and having declined by 23% year on year. Fantastic result, right? Probably still too high, but revenue loss is lower this year, which is a great result. I mean, you sort of feeling that you and the management team are starting to get on top of this issue?
Again, a lot of work to be done. I think from a critical infrastructure perspective, we are all challenged. Eskom is challenged, Transnet is challenged, water is challenged, roads. We are all challenged by crime and corruption. So there's a lot of work to be done in the country. But, I've got a good story to tell. So other than the 23% decline, I mean, we've still lost about 4.5 million tons purely due to theft and vandalism. If you take that conservatively and you put a tariff to that, that's a few billion rand that was lost. But you know what, from my days in the pipelines, we had the pipeline being attacked daily, sometimes twice a day. We would, I remember in 1 month, we had up to 26 incidents of attack on the pipeline. We've reduced that to 1 every 3 months, 4 months. So, but it required the, us to get together with the security companies, the authorities, to create holistic solutions. And I think we're getting there on the rail side. You would have seen recently quite a number of arrests because of operations that we've been running. All we ask for is the ability to run trains in an uninterrupted way. And at the moment, that is a major struggle. It's the things that keeps me awake at night because the customers expect their cargo at a particular point in time, and then we have criminal forces preventing us from doing that. So, we've put a number of interventions in place, but we are nowhere near where we need to be. And, my plea always in the country is let's work together because it's beyond Transnet. It's not only a Transnet problem, but we can help because it's not something you want to become good at, but we're actually quite good at solving these things and fixing these problems, and that's where we can help. So we must support each other.
Excellent. Well, well done on a pleasing set of results. Really encouraging. So if you don't mind, maybe we can turn our attention a little bit to the forward-looking prospects for the business. Mm-hmm. No doubt in the current financial year, FY 2026, which is March 2026, it'll be important for you to hit those volume targets of 180 million tonnes to keep the momentum in road and rail and to improve perhaps on the container and pipeline performances. But it'll also be critical to execute on the extensive capital projects and maintenance plans that you have. But if you don't mind, Michelle, can we spend a little bit of time on the medium-term outlook and specifically to discuss the network statement a little bit, which Rudy had touched on in his piece earlier. That final version of the network statement was released and gazetted in December 2024, and it provides a comprehensive information memo essentially about the rail network to potential users. For example, the train operating companies, the logistics players, investors, and so on. And it actually forms a key underpin to your reform strategy. There's been some constructive feedback, I think, from the market around the current bankability of that network statement, including elements like, the complexity of the tariffs, the condition of parts of the infrastructure at least, and the lack of recourse to the extent, you can't deliver service due to failing infrastructure, and then some of the capacity allocation rules, just to name a few. Has Transnet taken this feedback on board, and can we expect some of those concerns to be dealt with in the updated statement?
Yes, and thank you for that question. It's a good one. Look, as Rudy indicated, it's the first time in the country that we're doing this. So we've spent a lot of time with a number of experts. We've gone all over the world to try and figure out how best to do this reform. So the network statement we've now published, and we continue to listen to the criticisms and the inputs and comments from experts and generally from our customers and stakeholders. And of course, we would want to try and bring in as much of that into the network statement. So there will be another iteration of the network statement that will be published, trying to take into account some of these. Look, you're not going to get everything that you want. Yeah. We really want something that we think is the best fit for the South African industry and the economy. But we also want the system to be open. And we can't have, let's call it, criteria that makes it difficult. So we don't want to create new barriers. The important thing is to get private operators onto the system, and to also then support them, should they fall short, how to help them. So we do see the network statement coming out with a few more changes. I do have to say, Transnet operates the system at its own risk. Mm-hmm. I don't have anybody to sue when I derail, right? And the network is deteriorating as we speak. So we are doing a lot of work to get the network up to the right standard, right, to not only enable the movement of cargo by Transnet, but also the movement of cargo by private operators. Can I guarantee that they're going to be able to run a train in an uninterrupted way? No. And but we want them to be bankable. We want them to. We want the funders to understand that they're not throwing money, good money after bad. So we've already started with some of the work. But anybody who operates a rail network must understand that, one, we've got very limited opportunities to do the kind of things that we want to do. So I have on every corridor about 10 days per year during annual shut to do as much as I possibly can. Replacing of rails, replacing of whatever infrastructure that I have to do. And then at the same time also in between trains. If I had the luxury of stopping it all, and fixing it all, I would do that. But I don't have that luxury. We have to do whatever we can with the little bit that we have. So, we've applied for funding as well through the BFI facility, the budget facility for infrastructure. And I mean, the funders know we come and we talk to them all the time because we need to spend. I think we want to spend over the next 5 years about 127 billion rand to do some of this work. Not only rail infrastructure, but also equipment and the like. So that's our total capex expenditure. It'll be about 20 to about 25 billion a year. But the network needs to be fixed. And, we're hoping that as we do this, we already started doing it. You can see, immediately after the shut, the volumes go up. Yep. So we've been doing very well with the quality of these annual shuts, and now we are also getting our customers who've always been part of these shuts, but also contributing to some of the work that needs to be done, which is a good thing.
Okay, excellent. And just a quick question: when can we expect that update to the network statement? Will that be 1 April 2026, or will it be sooner than that and backdated to 1 April 25?
Yeah, it's an interesting one. It should be coming out soon, before December. We've decided that December is not a good time to let anything out because nothing happens. Yeah. So we want to try and time it so that it gives sufficient time for people to be able to also then respond. Okay. But it's pretty much done and been submitted, and now we have to wait for the, I think it's the IREC or the DOT to publish it. Yeah. Okay,
excellent. That's good news. So as Rudy mentioned earlier, you had a very positive response to your rail slot application process. You've got 11 qualified bidders who have kind of now moved on to that next round of negotiations and contracting. Can you give us an overview of where things stand currently with these TOCs, and also how you see them positively impacting your strategic objectives going forwards?
Okay. So, yeah, so we want to move as a country 250 million tons by 2930. As you know, our target for this year as Transnet is 180 million tons, but if you take into account derailments, theft and vandalism, conservatively we may end up with about 170 million tons. We are targeting the 180, so we cross fingers that that's going to happen. Which means that we still have a gap of, 70 million tons and above. Yep. In fact, I know that we've got more than 250 million tons ready to be moved. So there's a lot to go around.
Right.
The 11 operating companies have offered 20 million tons, and that is over 18 to 36 months. Not all of them are going to get onto the system immediately. They have to get rolling stock. They have to make sure that it complies with the safety regulations. So that is a 20, but we already started running an ad hoc process in the hope that we're going to get more companies able to move that cargo. And then, I'm going to worry about the competition when we get to 250 million tons.
Right.
Right now, it's about getting my business fixed, our business fixed, getting it ready, future-proofing it in a way, and getting these private operators onto the network in the hope that we can all together move 250. And I think, as the reform continues over the year, you'll find, as has happened in other jurisdictions, that the private sector, you'll find more private operators going up, and then obviously you'll find the state possibly reducing a little bit. So, exciting times.
Absolutely. I mean, you touched on it briefly. One of the aspects I wanted to cover with you was, one of the key issues for the train operating companies will be acquiring rolling stock, actually. Yes. Which has got a very long lead time, as you clearly appreciate, and will require significant financing. From a bankability perspective, I think it's going to be a lot easier for those that are allocated longer-term slots to finance their locos, and difficult, if not impossible, for those that are allocated, the kind of shorter slots. Which brings me actually on to the concept of your lease co, which Transnet is in the process of setting up. And into which I understand you're going to transfer a large fleet of locos and wagons.
Yes.
And, perhaps you can give us a sense of the intention around LeaseCo, how this will address the shorter and perhaps longer-term needs of these train operating companies, but also just kind of generally where you are in this process.
So on the LeaseCo, we went to market. We are currently busy with the evaluation of that process, so it's still an open process. However, so the intention is, look, when you are in trouble like I am, you want to monetize just about everything. So we're sitting with a large fleet of assets that are either largely underutilized or not utilized at all, wagons and locomotives. Right. Some of them are quite old, some of them require major refurbishment, some of them not so much. So what we've already been doing, and these train operating companies have been making inquiries, we've been leasing, entering into what we call tactical lease agreements with them, where, they'll say to us, we're operating on that line, we need locomotives and we need wagons, and we've been taking them to see the fleet, and they've been identifying what they want. If they need them to be refurbished, we do have a transit engineering that can do some of that work, or they can get their own, and, we can refurbish, and they can then utilize that. Now, it's very expensive. New equipment is very expensive, yep. And it will probably take you 2 to 3 years. So this is an attempt for us to assist so that they can get onto the system sooner rather than later, right? And we're sitting with quite a big fleet. I think it's a few thousand wagons, 20-odd thousand wagons, and again, about 1,000 locomotives. But like I said, not all of them can necessarily be utilized. We allow them to come in, they inspect it, and then we make available what we can, and we'll do the refurbishment, or they can get that done so that we can get them safe again and back onto the network. But really, it's two-pronged. One, it's to monetize, like I said, assets that are not being utilized, but also to assist with to speed up the entry of these private operators onto the system.
Okay, excellent. And I suppose lastly, in terms of the rail side of the business, the PSP process, obviously to concession, the All-Core, Nat-Core and North Core lines is underway. The RFIs were issued, as we know. in May 2025, and those RFPs, I think, were originally supposed to come out at the end of August, early September. Although this timing seemingly has been delayed. And there's some concern, I suppose, from the market that these timelines generally, I suppose, were pretty aggressive, and understandably so, given the complexity of the process. I mean, have you got any update for us in terms of timing, generally? And do you think it's realistic that we still reach financial close by the end of 2027?
So, okay, I'm going to identify a few transactions that I think the market can prepare themselves for. Now, yes, we ran the RFI process. The RFI process was really a market-sounding kind of exercise. The procurement process is within the Transnet responsibility. Now, as a state-owned, and I think you'll appreciate, there are a number of rules and procedures and ways to do things, right? I have the PFMA that binds me, Public Finance Management Act, and there's certain things that I do. Otherwise, you guys are going to call for my head, and you're going to say I'm doing funny stuff, right? So I'm going to do it the right way. The right way to do it is you have to ensure that you do the necessary feasibility studies, that you have a business case that is viable, and then you go to the market, because you also want to have an indication of what it is you're going to accept from the market, and you want the market to come to you with robust proposals, right? So we are the most ready PSP right now is the Richards Bay dry bulk terminal.
Yep.
I know Rudy said, what did Rudy say? Yes, it's something about October. November, is he there? Okay. Because he marks my performance scorecard and decides whether I get money or not. So they still haven't given me money, but yeah. November of 25, we will be out in the market for partners for the Richards Bay Dry Bulk Terminal. The potential there is for the Richards Bay Dry Bulk Terminal to go from, I think, moving 18 million tons now to moving 28 million tons. We need that terminal modernized.
Right.
It's going to be like a mega chrome magnetite facility. We need it mechanized, we need it automated so that it can move as much as possibly can. Richards Bay is natural deep water, so we know that there's great potential there. Then the second transaction we will go to market with is around about January of 2026. It is the Ngquga manganese export facility together with the rail corridor. We need to build a new facility because the PE facility is beyond its design life. We'll build a new facility and we need partners to be able to do that. We think the investment there will be upwards of 30 billion, of 30 billion. So that's a big one as well. Of course, we await the decision on the Pier 2 PSP. Yep. We are told the latest is that there'll be a decision by the end of September, early October. We're hoping that the judge makes the right decision and that we can then continue with whatever we wanted to do with Pier 2. Pier 2 will sort of be the lesson. We will learn a lot of lessons from Pier 2 in terms of what we then do with other spaces within the ports. But again, like I said, the ports, we've got more private operators in the port space. We need private sector participants in the rail space more than anything. But and then we've also got the container corridor, which will go shortly after that. And then there's another one, what we call Project Ukuvuselela, which is the auto corridor between Gauteng and the Eastern Cape. That one will also go to market. We're also going to want to look for a private operator there. And then I suppose the big ones will follow once we've concluded with the feasibilities and the business cases.
Right. Excellent. Yeah. I mean, maybe a bit premature, but have you got any sense at this stage as to the role that Transnet actually wants to play in some of those big concession opportunities, the PSPs, particularly the big rail lines, equity, supplier of kit, labour, or all of the above?
Well, I've been appointed to turn around Transnet. I've not been appointed to let her die.
Yeah.
So, yeah, we are continuing to work as best we can to turn this business around. Right. We've been, in fact, engaged by a number of the private sector parties wanting us to partner with them, right, rather than for them to take over, so to speak. So, yeah, there's definitely a role for Transnet. I mean, yeah, my deployment is for 5 years and I'm a year into it. So, yeah, we'll see.
Well, thank you. You know, I see we actually hopelessly out of time. There's so much more that I wanted to cover with you, but I actually think it's probably appropriate that we opened up to a few questions from the audience, and if there aren't, then I might spend another couple of minutes with some additional questions. But are there any questions from the audience at this stage, or those online? I don't see anything in the audience, presumably.
Clear as mud.
Absolutely. So the one other aspect of your business performance that I did want to touch on briefly was the port's performance. So yes, you saw that coming through positively, I think, in your financial results. Can you give us a sense there specifically of the operational performance and you know, kind of what is improving and what are the focus areas for you and the team at the moment?
So look, the efficiency for us is very important. I like to use the example, I use it during the results. November, December 2023, we were sitting with about 23 to 26 vessels outside of the Port of Durban, and everybody was very upset with us. So I use the example made by Andrew Kirby, who's the MD for Toyota, and he does it very nicely. He says that in November 2023, they were waiting upwards of 21 days, and he measures it from the time that a vessel is at anchorage to the time that they get the part in the factory in Toyota. And I love the example because he says November 2023, they were waiting upwards of 21 days. Today, as we speak, it's under 2 days.
Fantastic.
Right? There are no vessels waiting to be berthed. The container terminals have moved. They have now started reaching the 17, 18 levels in terms of volume movements. Sustainably, for the past few weeks, they've been moving in excess of 90,000 TEUs per week, and their highest was, I think, 103,000 TEUs in 1 week. Lots of excitement amongst the teams, but largely because we've invested in the new equipment, and they are beginning to see the new equipment now coming into the space. So I'm expecting a lot more when the equipment actually starts working. So you'll see in Cape Town, you know, we've just renewed the fleet there with 28 RTGs. We did Pier 1 as well with 18 RTGs. We introduced 20 saddle carriers in Durban, Pier 2. Next month, we will be celebrating the commissioning of 2 ship-to-shore cranes in October and another 2 in November, 2 ship-to-shore cranes. And across the port space, we've been introducing new equipment. But you know what? Our relationships with our customers and our OEMs have really helped us here. You know, finally, people are excited that, you know, the equipment purchases that should have been done probably 5, 6 years ago is now, you know, coming in. And we've been able to do this in 18 months, been able to get this equipment into the space. So we're excited about what's going to be happening in the port space. That's massively encouraging. It happens to coincide, actually, time-wise, with your tenure as CEO. So congratulations. Well, they'll remember me for all the new equipment. Exactly, exactly. Perhaps the last point that, just given that we've run out of time, that I wouldn't mind spending just a couple of minutes on is the South African Government Guarantee Framework. Yes. And just can you give us a high level of the guarantees Transnet has applied for and how they're going to be applied in your financing plans going forwards? Okay, so I'm going to try and remember the numbers. We're sitting, I think in total, Andre will help me, with about 199 billion now in total. We started with the 47 billion rand in December 24, I think it was. And it came along with 33 guarantee conditions. We are largely compliant. Yeah, the Minister of Finance has made it very difficult for me. Apparently, I'm the problem child who needs tough love.
Right.
You know, we've been complying with those guarantee conditions. We are in the process. In fact, we have now renegotiated the GFA. Essentially, what it includes are things like we've had to establish the infrastructure manager. We've done that. We have to corporatize the TNPA. We are in the process of working on that. And then some of these transactions that I mentioned needs to go to the market. So those are largely the guarantee conditions. I think government wants to ensure that Transnet proceeds with PSPs.
Yep.
Look, the bottom line is we can't do this all on our own. We have to allow the private sector into this business. And that's what we're doing. So you know, of course, we have to also renegotiate some of our lender agreements because you know the impact that the cost of the financing has on our financials. Yep. You know, if, you know, I keep saying, you know, it's just a few billion and this business is profitable. But we need help when it comes to the finance costs. And then, of course, to reinvest in the business so that the operations can do what is required to do.
Yeah.
It's difficult at the moment. I'm paying my bond with my credit card. It's maxed out.
But, you know, just based on the work that our teams at Standard Bank have done, I mean, you can see the benefit of this guarantee framework and the compression in spreads that you're getting year on year. You know, if you compare some of the privately placed financing that you've done this year to last year, you're seeing spread compression of up to 75 basis points there, which is incredibly positive. Obviously, that reflects to some extent some of the improved performance that you see in Transnet, but the framework, you know, obviously is going to help you lower those financing costs, and that'll translate into better bottom line performance for your business, which is incredibly positive.
Absolutely. And I mean, you know, I didn't take on this job because I thought it was impossible. I see the potential in this business, and I think every investor should be able to see the potential in this business. We manage it prudently, we manage it correctly, we manage it you know, with new ideas and innovation, and we get our people excited. And yes, we open it to the private sector, and we collaborate. And that's how this we will succeed in moving and getting the numbers that Rudy is asking for.
Excellent. Let me just check if there's any questions that have popped up in the audience. At this stage, Michaeli, were you raising your hand or no? Okay. It doesn't seem like it. So maybe just as a concluding point for you, Michelle, you know, we've spoken about a number of very significant strategic imperatives for Transnet today. Within that lies a huge amount of opportunity, I think, for people sitting in this room, you know, for the corporates, the investors, and so on. Is there anything specifically you would like to point out to those in the room around, you know, what it is you're looking for from them over the next 3 to 5 years?
Well, I think we're ready. We're going to be engaging a lot more.
Yep.
We understand the challenges that we're experiencing, and we want to share that, not only with our investors, but with our customers, with our service providers. I believe that if we all work together, then you know, we can resolve and we can solve whatever challenges we have. So yeah, we're open for business, and please come and have conversations with us.
Well, thank you so much, Michelle. It's been an absolute pleasure to talk to you today. You know, thanks for so generously sharing your insights and your time with us today. I've got no doubt that there will be material interest from this region to participate in the opportunities that you know, we've touched on. And that are so material to, you know, Transnet's success and the success of the South African economy.
Thank you.
Thank you very much.
Thank you.
Thank you so much, Mr. Barnes and Advocate Phillips. In Africa, we say it truly takes a village to raise a child.